Wow, stocks really pumped today. And I'm starting to ask myself whether this is a reverse stock market crash. I say that because here we're looking at MAGS or the Magnificent Seven, and they've managed to close back above their short term price or their 50 DMA. Make sure you watch all the way till the end of the video because I'm going to leave you with two hot tips today. But first, the reason why I'm looking at this 50 DMA and specifically this big rip is because we've been talking about this pattern here for quite some time. We've been talking about reclaiming the 50 DMA, stopping to go down, putting in hollow candles. And let's go through here. Let's see what we're doing. Well, we're back above collectively for the Magnificent Seven, back above the 50 DMA. Hey, that's progress. We look here to the next step, stop going down. Okay, well, what did we do today? Oh my goodness. We have our downtrend right here and we closed above it. Whoa, strong. We had a gapping go today. All right, so at least the Magnificent Seven is back above its 50 DMA. S&P is not yet, but it did stop going down, and we're putting in hollow candles. Why do hollow candles matter? Well, they matter because it means we're closing higher than we opened, or we're seeing bids. Let's look at the last 5 candles now. So I know it's a little bit harder to see the hollow candles on the screen, but just bear with me because I love this. 1, 2, 3, 4. 4 out of the last 5 candles are hollow, which means that people have been buying the dip, right? They like the dip. They bought the dip. They want more, right? They like dip. So what we need to do now is to start going up. And there might even be a start of an uptrend here. So over the weekend into next week, I'll update the videos. But it looks like if the bulls want to break out, they now have a template to get there. And short sellers or net speculators actually went net long. They stayed long. Oh my goodness. We're almost back into neutral. So we got pretty close to extreme fear. Didn't quite get there. Now we're getting a little bit of a bounce. Come on, timeline. Are you going to show me? So we got all the way to extreme fear, back to extreme greed. Not quite there. Hit about 32. Now we're getting a dead cat bounce. We're also going to give an update to the SPY and QQQ alerts we talked about. And specifically, are we going to hit our targets or are we going to hit the stops? I'll go through these a little bit later in the show. What I want to remind you of first is that we have a big week next week. We got Apple, we got Amazon, and we got Jerome Powell. That's right. The Fed meets next Wednesday. Oh my goodness. So Amazon on Tuesday, Powell on Wednesday, and then Apple on Thursday. Okay, well, looks like next week's important. Yes, next week is important. So we get the interest rate decision, the press conference, and I think Jerome's going to have to be a little bit more hawkish. That's just what I think. The other thing I want to go through is to try to understand what happened in the last day. I was away yesterday. Thank you for your patience. But as I'm looking at the heat map here, I'm like, okay, well, NVIDIA is up by 6%, Google by 10, Amazon by 3.4, AVGO up by 3.8. All right, what happened here? If I look at the last 1 week, I'm noticing a similar trend too. Meta red, big tech largely doing well, and a little couple of pockets that are a little bit mixed. Just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. Thank you. So when I look at the last 1 day versus the last 1 week, I'm trying to understand what the market is telling me because every day it tells us a story. It's up to us to decipher it to make sure we understand what we're doing, right? Kind of like the Da Vinci Code. So NVDA, why is it up 6% today? Why is Amazon up? They didn't even report earnings, right? It's up more than Microsoft. But on the week, it's kind of flat. Microsoft kind of flat. Google up 10. Well, let's read these headlines here and let's see whether or not it makes sense. Remember, Meta's down by 12. And NVIDIA moved big time. So Zuckerberg asks for patience as Meta's AI push spooks market, right? They're going to spend billions more than previously discussed, and they're not making money from it, at least yet. Okay, that explains the blood here for Meta. All right, now let's move on to Alphabet. AI fuels cloud growth. Oh my goodness. Cloud revenue grew 28%. Okay, that part I understand. Now let's go to, and they issued a dividend and a buyback, right? I got the trifecta here, right? Got the hat trick. Let's go, Google. We'll look here to Microsoft. Profit beat expectations on AI demand. Oh, AI. Cloud grew 31%. Cloud grew 28%. Oh, let's go back to the heat map. Okay, Meta stinks, and they got nothing on AI. But let's look at the one-day performance after these mega caps reported. Alphabet and Microsoft. Oh, AI. Yes, that's what they just told us is going to do well. 6%. That's the king. Yep. And then what about these ones here? Cloud grew. cloud grew. Who's the king of cloud? Hey, that's AWS. That's Amazon. All right, party on, boys. Let's go. And then AVGO, another chip maker, also up. This looks like I understand what's happening here. I think, right? I think I know what's going on. But the part that's a little bit confusing for me is that when I look at the data from this week, specifically the GDP and the PCE, I'm starting to get a little bit more concerned, a little bit more anxious. And I'll tell you the reason why. There's this word called stagflation, which you might not understand. It's like a dragon, right? It's this thing that everyone talks about. You rarely see it, and you don't want to see it. So that's when the economy sees weak growth while inflation runs high. Stagnant growth, high inflation. That's why they call it stagflation. So let's read this one more time. The economy sees weak growth while inflation runs high. Ah, crap, right? Inflation is high at 2.8 and GDP is at 1.6. Uh-oh, right? And the US is actually the only game in town, which is actually good. So the reason why this really matters is because next week, I want to hear what Apple has to say. I want to hear what Amazon has to say. I want to hear what Jerome has to say, because that would be right near the top of my radar. If I was Jay, I'd be like, oh, crap, right? I don't know what's going to happen. So I just want to be prepared for whatever could happen next. I also talked about 2 hot tips I'm going to leave you, so I'll do those now. And then I'm going to come back and talk about a few more charts, including the Magnificent Seven. And we'll talk about a quick update on here. But here we go. Here's those hot tips. We went through this on the stream this morning as well, if you want more context. Pan W and Lulu. We bought both of these today at the close. The stop trim target levels are all right here, and we're buying these for a window of opportunity for roughly 3 months. If you enjoyed this segment, let me know. I'm more than happy to share more ideas. So make sure you smash that thumbs up, and maybe you want to subscribe, because I'll be putting out more ideas in every video if I can. There's not ideas every day, but I will try my best. Okay, so those were those hot tips. And as I mentioned here, let's just quickly go through these Mag 7. Then we'll look at S&P and QQQ. Then we'll leave the rest for the weekend video. So back above the 50, 2 daily candle closes back above, potential trend change. What's interesting here is we had a daily fail breakdown yesterday and then a gap and go. Volume came in, but it's not huge, right? So looking here at Microsoft, rejected on the 50, the gap up did get sold off. So gap ups were for selling here. We're not going up anymore. We're not above the 50. What I really want to see is what's going to happen to Microsoft when we come down for this gap fill. Are we going to get a gap fill bounce and then reclaim the 50? Are we going to get a gap fill bounce and then fail? Or are we just going to go sideways? Each one of those presents different opportunities. Make sure you're aware of that. Looking here to Apple, weak, right? Dead cat bounce, dead cat bounce, dead cat bounce. This one's weak. It's kind of like Tesla, though, where the bar is so low. People already know all the bad news. It's already going down into the dungeon. And what could they do that's bad? Like, I don't know. If anything, I think they could surprise with WWDCTs. We're supposed to get an iPad update or something. I don't know. NVIDIA, oh my goodness, right? Gap and go. Broke the downtrend, right? You do it, NVIDIA, right? Did it. NVIDIA is one of the strongest stocks here. We can clearly see that. Dragging that MAGS back above the 50 DMA. We do still have a high, lower high, lower high, lower high, but it's looking quite constructive. We're not going down anymore. We're above the short-term price. Hey, this looks a little bit constructive. It does. Google, massive hole in blue sky territory. We got a big old hole here. So our previous all-time high is at roughly 151, 151.5, and 154. So I don't know. Let's do this. Let's watch for an inside bar break. If the inside bar break bear, we're probably looking for closer to a gap fill. If we get an inside bar break bull, hey, bulls are in charge. Let's keep going. If we look here to Amazon, back above the 50, gap and go, really big drag, right? This was supposed to be the strongest stock out of all the group going into earnings. Really struggling here a little bit, though. We'll see what happens. In hindsight, will this have been in knees and toes? Or are we going to reclaim this uptrend and go higher, meaning the 50 MA? For Meta, we have a higher high, but we closed just below. So this is looking like we're going to at least run a test to 453, which corresponds with our gap fill. So a gap to the upside. Let's see what happens. If we get through there, we can make a run to try to get to a gap fill on the daily here at roughly 484, roughly $10 higher. Tesla, let's see if we can actually test that 50 MA, or if we go back down to fill this gap. I'm not sure which one's more likely. So what this all means is that if we now go back here to our levels, again, we're looking at a trade alert. This is an active trade for me. I'm up by 1.2 and 1.8%. But as I look at these two alerts, what I'm telling you is that these stocks are not all doing well. Some are good, some are bad. We've only looked at the mags as well. But what this basically means is that after next week, right, big earnings, Powell, where are we going to be? Because if we look here objectively, we got awfully close to hitting this area here, right? Awfully close. So I would like to see us at least get awfully close to the upside here, right? Let's see if we can actually make it higher. If we can or can't, it just shows us how much juice these bulls have. The volume doesn't really impress me. And if we hit the low, like we're going into another weekly lower low, that's bad. And the reason why it's bad is because this week we have inside bars, which means we have indecision. So indecision in a bearish trend, you probably guessed it, it's bearish. But we're closing at or near the high of the week, and we're likely going to get a higher high next week, right? Yeah, it's getting confusing. But we have an inside bar as of right now. Same thing with QQQ. It's an inside bar, and ironically, we're right here on last month's low. 432.74. We're off by about $2-3 here. So that's it for today's video. Thanks so much for tuning in. There's more if you want to watch on the left. If not, tune in tomorrow or subscribe and see me on Monday at 9:15. Thanks so much.